measure some extreme market moves today that make this market incredibly challenging. And what I talked about in my daily video is the standard deviation is greater than the net change. So for example, this move right here was about 370 points, and it happened within about 30 minutes. Let's see, right around 30 minutes, and the total, it was down on the day minus 265. So the net change on the day was minus 265, and the counter trend move was about 100 points greater than that. So the open to the close, this was a nice trend. It was very choppy at first. So if you're looking at this, and visually when you look at this, you see this trend up, and then you see this trend down, and you think of this as the opportunity from here to here. But in real time, you see this pattern right here, and you don't really see this get rolling. It's not always obvious from a chart pattern that this is going to roll over until right in here. So right in here, it starts to be obvious that this is going to roll over again, or more obvious, and not from this point. From this point, this looks like a pullback. This looks like a double pullback. And then what also makes this challenging is the advanced decline line plus 1,000, opens up plus 1,000 here, and then you see not opens up, the market opened up here, but at the Fed it was plus 1,000, and then it was minus 1,000, over minus 1,000. Then it took out this beginning of the day, beginning of Fed meeting, plus 1,500, then all the way down to minus 1,300 area. And so it'd be interesting to note how it's very rare that the market would go from plus 1,000 to minus 1,000 to something over plus 1,000 to minus 1,000 again in about 2 hours. It's rare that it would do that in any given day, that many turns in any given day, but in 2 hours, that's really extreme. What's even also extreme is the VIX is only at 27.99, and we've just seen this relentless desire to buy the dip still. It's unbelievable to me how difficult this market has been to short. Oftentimes the market is volatile when you short it, and it's difficult to short the market. But in a downtrend, there should be a little bit more opportunity to short this market on day trade basis, and so this type of price action makes it pretty challenging. So there's always a way, but it's been challenging. You can see that in the S&P as well. Just this wild whipping mean reversion where it's divergent. It takes out the lows, takes out the highs, and then takes out the lows again. And the VIX is that way. The advanced decline line is that way. It is very hard to get a handle on which direction this market's going to move. In our portfolios, it pays to trade on FOMC day. Longer term, they can spawn some incredible trends. And we were up on the day at these lows, and this reversal stopped us out, got us long, and then it rolled over again. So that was a challenge today. But this market has been incredibly challenging. Wanted to point these key indicators out with these advanced decline line, making 4 massive turning points: 1, 2, 3, 4. The plus 1,000, minus 1,000, plus 1,000, minus 1,000, and as well as the market. And so wanted to point those out. Always talk about this stuff for potential strategy opportunities. It's hard to work with a market that's doing things that is rare. When a market does something really rare and it continues to chop longer than normal, it can be difficult. And so I wanted to point these out today after FOMC.
Hey, David Bean here. Welcome to Capstone Trading Systems YouTube page. Be sure to subscribe to join our community of algorithmic traders. We are real money traders. We share our winning streaks, we share our losing streaks, as well as market updates, strategies, and coding tips.